Once again, we're just really trying to share this information with the community as we've been staying on top of it as the language is emerging. I'm going to start with this slide. Some of you may have seen this website from the last 2 weeks. This was the actual SBA website that was dedicated to disaster assistance through the SBA. I went ahead and put the link for the website right here in this slide. This is the page it takes you to. And of course, there's a button there to go ahead and apply for assistance. Again, I want to reiterate that this was the website that up until last week and in previous weeks, while COVID-19 was having an impact on local businesses, people were going to this website to apply for what is termed disaster assistance. Specifically, the SBA was and is offering economic injury disaster loans, or what they call EIDL. In previous weeks, all the way up until last week, that website, and I'm going to go back one slide, when you logged into this website, it looked different. It would prompt you to set up a username and password, select your state, city, county, COVID-19 as the applicable disaster, and EIDL as the type of assistance you were applying for. As of this weekend, this website now, when you go to apply online, will prompt you to visit this page. It looks like they no longer have an electronic kind of application or the same electronic application up that they had just a week ago. They've got some new instructions on how to apply, and I'm gonna move on to the new act and kind of make the linkage of why I believe this site has somewhat changed. So again, these are economic injury disaster loans available directly through the SBA. That people were logging onto this website last week, and they probably still currently are. I will tell you, the site was slow. It crashed multiple times. It's a government site, and I believe it was overburdened. They had notices up on the site that it may crash and it may be down. So that being said, that was and is the EIDL disaster assistance directly through the SBA. What happened last week is that Congress, first in the Senate and then in the House, approved what's called the CARES Act. The CARES Act was signed into law by the president on Friday, and the CARES Act, within it, created a program called the Paycheck Protection Loan Program, which you see the title of here. I put a little abbreviation of PPLP, and that program is designed to provide an estimated 350 to 400 billion. We're not sure of the final number. I've heard estimates within that range of support to small to local medium-sized businesses through loans and grants. So these loans through the PPLP program are backed by the United States government through the United States Treasury and the Small Business Administration. So once this program was passed and signed into law on Friday, this now became a new additional source of loan funding, whereas previous to that being passed and signed into law on Friday, the only thing that was available was EIDL. That being said, since this law just passed Friday, it's brand new. Sal and I have talked to some lender sources that in the local area that we have contact with or relationships with. And this information is new even to the lenders. So this is kind of like hot off the presses, so to speak. Information that's rolling out not only to the general public and businesses, but also the lender sources. And the reason I bring that up, and you'll see here I have a note that it is a different and separate program from EIDL. And like I just said, so it's a new program. Let me let me just say the two programs still do exist in tandem. So EIDL is still in existence. The Paycheck Protection Loan Program is new, and we're going to talk a lot about that. Specifics on the Paycheck Protection Loan Program are still emerging, but the federal government has stated that if you applied for and end up receiving EIDL funds and then go ahead and apply for Paycheck Protection Loan Program funds as well, there will be a cap on the total amount of support that a business is able to receive, and any previously received EIDL funds will be offset against the amount you're eligible for under the Paycheck Protection Loan Program. So a little more information about this program. One, I want to start by saying that, is this you? Oh, I'm sorry. I'm gonna actually turn it over to Sal to walk through these slides, but before I do, I wanna make one more important distinction. The Paycheck Protection Loan Program these financial resources are gonna be deployed by private industry lenders, banks, credit unions, and other SBA lenders. So I wanna make that distinction because it's very important. The federal government in deploying loan programs tends to have their system clogged up and overburdened rather quickly. And they're not always quick in terms of processing information, getting support to folks. So one of the key distinctions under the CARES Act and this Paycheck Protection Loan Program is that the federal government is supplying funds to banks, credit unions, and SBA lenders at the local level across the country to administer this loan program, take in applications, and hopefully be able to get funding out to small businesses much quicker than would be the case if the federal government directly through the SBA was charged with handling all of this themselves. I'm gonna slide out of the screen here, and Sal's gonna walk you through a little more of the information emerging on the Paycheck Protection Loan Program.
Thanks, Anthony. Good morning, everybody. Just want to talk a little bit about the Paycheck Protection Program, just to give a few more details with respect to this program. First of all, there won't be any fees charged when applying for the program. So that is part of the CARES Act, that applying for the Paycheck Protection Program, no fees will be charged to the business to go ahead and do that. In addition, many of the SBA program requirements are going to be waived. Those include, and just as an example, a lot of times when you apply directly for an SBA loan, one of the requirements would be that you would have had already applied for, say, a regular loan or line of credit with a lending institution, and you had been denied for that loan. And therefore, your only resource then is to work with the Small Business Administration. So that requirement with respect to having applied with another lending institution is now waived. So that is no longer a requirement under the Paycheck Protection Loan Program. Also, there are no requirements for any personal guarantees. So, typically with a normal SBA loan, you as the business owner or owners would have to personally guarantee the loan, as well as have some collateral to secure the loan. So the collateral requirement, as well as the personal guarantee requirement, is being waived under this new Paycheck Protection Loan Program. Let me see where. Now, as Anthony mentioned, who's going to be administering these loans? Well, it's not going to be the SBA. So Anthony talked about how the SBA, as a government resource, is not going to be able to handle the influx of business loan applications. So therefore, under the CARES Act, what they've done is they said, hey, let's have the banks and credit unions administer this program. So really, as a business owner, that's really helpful in that you can go to your local bank, your local credit union, And or there are also online lenders that will administer this program as well. So really the only caveat currently that we're aware of is that that bank, credit union, or online lender will need to be part of or approved by the SBA to administer what is called a 7A loan program. So as long as your bank or your financial institution is a 7A approved program lender, then you can go ahead and apply for the Paycheck Protection Loan with your local bank. So really what's happening is they're trying to take the burden off of the SBA and the SBA website and really move that over to the local banks. Anthony and I do have, and I believe we're going to send out at the end of this presentation, a list of banking institutions here in Arizona that are approved SBA 7A lenders. So definitely take a look at that. There are quite a few banks here in Arizona that are able to or allowed to administer this program. So most likely your financial institution will be on there. But if not, the other part of the CARES Act is that it has granted authority to the U.S. Treasury as well as the SBA to add additional lenders to the SBA system / the 7A loan program. So they do have the authority to add more lenders to meet all the demand that's going to be upcoming. So if your institution isn't currently approved, you may want to continue to check with them to see if they are going to be applying for this 7A program. And if so, then you can work with the institution that you currently are banking with. Now, with respect to eligibility, so there are some eligibility requirements for the Paycheck Protection Loan Program. The first of which is that you must have been in business prior to February 15th, 2020. So you have to be an existing business. Now, a lot of these eligibility requirements are going to have to be documented with the banking institution that you work with. So you'll have to show them some sort of support or evidence that in fact you were in business prior to February 15, 2020. Now they're doing that, again, because they don't want any new businesses that just started here during this crisis to apply for these loans. It's really existing businesses. The other eligibility requirement is that it is for businesses with fewer than 500 employees. However, there are some exceptions where businesses with more than 500 may be eligible, but again, that will be specifically worked out with your lender. But the program is really designed for businesses with fewer than 500 employees. Nonprofit organizations with fewer than 500 employees are also eligible for the Paycheck Protection Program. So wanted to make that point clear as well, is that if you're a nonprofit and you have employees, you are eligible to apply for this loan. Finally, sole proprietors and independent contractors also qualify to participate in the program. Now, what's difficult about independent contractors as well as sole proprietors is that most sole proprietors don't run payroll, and they typically just pay themselves through the profits of the business, and independent contractors are obviously not on payroll. So really, the details about how those eligibility requirements for independent contractors and sole proprietors are still forthcoming, and those will have to be worked out with the lending institution that you end up applying with. So again, nonprofits, fewer than 500, businesses in general with fewer than 500 employees, sole proprietors, and independent contractors are all eligible for the Paycheck Protection Program. Just some general loan terms with respect to the Paycheck Protection Loan Program. The maximum interest rate under the loan program is 4%. So again, that is a maximum rate. It'll be up to your individual lender to determine what the final interest rate will be. The maximum loan value, so the most that you can borrow is $10 million under this program for each business. So it's $10 million for each business. Now, the amount that the business can be eligible for under the program, so the dollar amount that they can borrow under this program is going to be the business's average monthly payroll costs, okay? So my understanding currently is that it is a 12-month average. So your average monthly payroll cost times 2.5. So that would be the amount that your business would be eligible to borrow under this new program, the Paycheck Protection Program. So really, you know, what they're doing is essentially letting people borrow money or funds that will cover 2.5 months of payroll expenses. So again, it's your average monthly payroll costs over 12 months. Come up with that average, multiply that times 2.5, and that will give you the amount that you would be eligible to borrow. And in turn, that's supposed to cover 2.5 months of payroll expenses. So the payroll, the average monthly payroll cost really is defined as wages, so your gross wages, payroll taxes, and any employee benefits provided by you, the business owner or the employer. So all of those costs would be included in determining the total payroll costs and then using the average over the last 12 months and then multiplying times 2.5. Now, there are some limitations with respect to that calculation for these payroll wages, and that comes in the form of employees who earn, it's really only for employees who earn $100,000 or less, under $100,000 annually. So just want to make that clear. And I believe the calculation may allow for an adjustment, right, whereby if you have an employee, say, over the $100,000 threshold, what you would do in your calculation is bring them down to under 100,000 in order to calculate your average monthly payroll costs. So again, if you have an employee that's making 120,000, you would bring that down to, say, 100,000 or 99,000, and then use that as part of the calculation to determine the monthly average payroll cost. Can you hear me okay? Well, so really, you know, that's it with respect to the general loan terms. I'm going to hand it back to Anthony. There is an element of this program whereby this loan can be forgiven or essentially turned into a grant. So I'm going to go ahead and have Anthony talk about the forgiveness element of this program.
So before we move on to those elements, I'm just going to backtrack for a second on a couple points. One, with regard to, you know, we're talking a lot about calculations in terms of what a business is eligible for in terms of payroll. And again, this information is brand new, right? So like I said, the lenders are just getting it starting today. And how the calculations are actually going to be done during the application process is really going to be known during the application process and working with the lenders. But in reading the literature related to this act, again, even though we're talking about payroll, the bill and the program is intended to cover sole proprietors and independent contractors. And again, we understand, and most of you know, those folks tend to not use a formal payroll processing system. They get paid, you know, a lot of those folks get a 1099 at the end of the year for the contractor services, independent contractor services they provide. And then, you know, some of them on the sole proprietor side end up just paying themselves from the profit of the business, but not through a formal payroll system. Current understanding is that to the extent you can gather that documentation together, your 1099s or bank information about what you make or get paid or pay yourself through the business, that's going to be used by the lenders in lieu of formal payroll reports to determine eligibility amounts. So, you know, if you have a formal payroll processing function, great. If you don't, our current understanding is the lenders are going to be working with businesses and business owners to identify the documentation they have on hand to justify the amount they're eligible for under the program. The other thing I wanted to just reiterate before we move on is, like Sal said, they'll go ahead and you'll be working with the lenders to determine your eligibility in terms of the total amount the business is eligible. It truly is intended to again provide, you know, inherent in the name is the Paycheck Protection Loan Program. So it really is the intent of the program to provide that 2.5 months of coverage on all of the costs associated with the payroll, including the benefits, healthcare benefits, or anything else that the company provides. So I'm going to move on now to some of those kind of loan forgiveness or grant conversion to a grant elements of this program. So as a general rule under the program, the information that's out there right now says, for the 8-week period after the loan is made, the loan administrator, so the lending institution that you're working with, they'll request documentation for certain business expenses incurred during that 8-week time frame to determine the amount of the loan that may be forgiven, essentially turned into a grant, so that the principal of that loan does not have to be repaid. Okay, so here are the 3 main expense types that they'll be asking for the business owner to present to them and ultimately justify through documentation to come up with the amount of this loan that may be forgiven in terms of the principal loan amount being turned into a grant and not having to be paid back. Obviously, the payroll expenses. So again, documentation for that could include payments to owners, your payroll processing reports or payroll registers, your rent for your business facilities, or your mortgage interest if your business happens to own its facilities, and then your business utilities. So again, I want to stop here and make an important distinction, because I think I've seen in some of the literature that's come out just since last week, there's been some confusion. First and foremost, the amount you're eligible for under the loan program, what determines the amount of the loan you're eligible for, is purely payroll or paycheck or pay related. Where rent and utilities come into play is on this component in terms of calculating what of that original loan amount can be forgiven. So again, one more time, step 1, they'll determine what you're eligible for based on payroll or pay to employees and owners. The loan amount will be set, hopefully issued. It'll have a 4% interest rate. During and at the end of the 8-week period, they will then say, okay, show me all the payroll expenses you've incurred. Show me if you've incurred rent or mortgage interest and utilities during this 8-week period. We'll use that total amount and determine what, if any, of your original loan amount can be turned into a grant and essentially not have to be repaid. It's our understanding that any accrued interest at that maximum 4% rate will have to be repaid. But the principal loan covered, if you've got expenses of a certain amount related to payroll, rent or mortgage interest or utilities, the aggregate of those expenses incurred over that 8-week period you can essentially go back to the original loan and turn that amount into a grant that does not have to be paid. If you as an employee end up reducing headcount or employee wages over the 8-week period, so a loan is given to you based on certain level of payroll expenses or employee and owner pay, but then during that 8-week period, you end up having to lay people off, or business is slow, or you reduce folks' pay, they will make an adjustment in terms of what can be forgiven on the loan and turned into a grant based on those reductions you made in employee pay or employee headcount. Essentially, they're saying, hey, you applied and were granted an amount for your loan out of the pretenses that this was going to be your payroll expense. If your payroll expense ends up being lower because you reduce headcount and or you reduce pay, they will go ahead and adjust the amount that can be forgiven, and you will still be responsible for paying that amount back, and interest will continue to accrue. So I understand this is a lot of information. Again, it's a dynamic and fluid situation. These are the initial specifics that are coming out. I think more of these specifics will continue to present themselves this week as the lenders are brought into the loop. Again, we've talked to some of our lender contacts in the area. They're aware of the program. They're aware that it's being rolled out this week. They've got basically the same general information that we have. They're waiting to hear from their management at their institutions on more specifics related to the loan application process, preparing themselves to start fielding inquiries, applications, questions, and whatnot. So for right now, what can you do as a business owner? First and foremost, continue to educate yourself. Just like you're listening to this webinar, there's a lot of good information online about this program. There's a United States Chamber of Commerce presentation that Sal and I watched this weekend, and we thought they did an excellent job in going over this program. I would suggest watching that presentation or other webinars like this, because sometimes the redundancy in hearing the information will continue to make it more clear. And again, there's going to be other sources of information available and being updated in real time, not just through government websites, but the lenders themselves at our local level here in Tucson. The next thing you can do, and Sal mentioned this earlier, I'll throw it up on the screen just to give you a quick visual, but we've provided it to the chamber. Start with contacting your local bank or credit union that you currently bank with. And inquire specifically about this Paycheck Protection Loan Program. The initial response you might get could be to the tune of, we're aware of it, but we don't have all the specifics. Stay on top of them. Be diligent about staying on top of them. The other option you have is looking at this list or looking online for other SBA lenders in the local Tucson area or in Arizona, and there are online SBA lenders too. Identifying those folks and starting to make those phone calls to see who's lending under this program. Because at this point, it's kind of an unknown to what extent each individual bank, credit union, or lending institution is going to kind of get their act in order and get up to speed on this thing quickly and be able to process applications quickly and ultimately get these funds into the hands of business owners. So first steps first, continue to educate yourself on this information. Reach out to your local bank or credit union. Look at the list of approved SBA lenders and start making those phone calls. The other thing we suggest you do is, in anticipation of hopefully getting in touch with somebody and being able to apply for this program, we would always recommend go ahead and get your documentation ready sooner rather than later. So if you have formal payroll processing, go ahead and start payroll reports or payroll registers. And I would recommend just getting 12 months worth. I know Sal mentioned they're going to do kind of a 12-month look back to determine that average monthly payroll costs. However, we did mention earlier that the business only has to be in existence before February 15th. The reason I bring that up is I understand there might be business owners that are saying, hey, my business was in existence before February 15th, but it's still not 12 months old. I don't have a full 12 months. Pull together whatever you have for as long as you've been in existence, if less than 12 months. Again, our understanding is to the extent you haven't been in business for a full 12 months, as long as you've been in business since that prior to that February 15th date, the lenders are going to work with whatever information you have available in doing the calculations for eligibility. So go ahead, pull your payroll documentation together. Again, if you don't have a formal payroll processing system and you're a contractor who receives a 1099, or you're an owner who pays yourself just through the bank account of the business, start printing bank statements and identifying where those payments are on the bank statements. Start pulling, if you have access to check copies online, start pulling those down. If you have 1099s that you received as an independent contractor from the previous tax year, 2019, start getting copies of those together. Because there will be that process whereby they look for eligibility on the back end of the loan in terms of what can be forgiven or turned into a grant, and they're going to use rent, mortgage interest, and utility expenses to determine what can be forgiven. Go ahead and start making copies. If you have a rent or lease agreement in place for your business, get a copy of that ready. If you own your facilities and make mortgage payments, get your mortgage documents or statements ready and copies of those ready. And of course, your utility statements as well over that 8-week period, or to the extent you can't get a hold of those, again, go back to your bank documentation and identify or highlight those utility payments on that bank documentation. So,
hey, Anthony, a question on that point really quick. Is that okay?
Yeah, of course.
In regards to the grant or the loan becoming a grant in a way and forgiven, you said the utilities, rent, and payroll are going to be factors in what gets essentially turned into a grant. Is that correct?
Correct.
Right. So for us, for the restaurant, for example, we're going towards takeout and dine-in, right? So both our utilities, like we don't need DirecTV, we don't need lights, we don't need that high of an electricity bill, right?
Right.
So when they get those numbers back, when we get those numbers back to them, so that they can make an assessment of what will become a grant, do you think that they'll factor in that we have changed our normal business from the 12 months of business data we're going to give them? Are they going to factor that in? And there's going to be some variation in that. Is that correct?
So again, I think it's important to understand that the two components. So eligibility in terms of the amount you're eligible for in the loan. So it starts as a loan no matter what. It's purely based on payroll, right? So they're going to come up with that number based on payroll and pay. My understanding is, and again, this is a fluid situation. At the end of the day, the lenders are going to have the best specifics, but we're bringing you this information now because we want business owners to jump on this, and we know the lenders are not as up to speed as we'd like them to be. But point being, so payroll will determine the amount of the loan you're eligible for. My understanding at this point, and again, I'm going to caveat this, I could be wrong, that what they're going to use to determine what could be eligible to be turned into a grant and not repaid is payroll, rent, mortgage payments, and utilities only during that 8-week period. So for example, if you're only using some utilities during that 8-week period and not other utilities that you used before this whole thing started, it's my understanding they're not going to give you credit for that stuff that is not being used during the 8-week period. Similarly, you brought up another good point because you still are operating in some capacity doing takeout. Again, the lenders are going to know the specifics. But I would make the assumption that even in determining that amount, I'm not sure if they're going to give you 100% credit for utilities, rent. I'm just not sure, knowing that you're still somewhat operational. They could be making an adjustment for that. But those are the types of specifics that we're kind of light on now, and that the lenders are going to be in the best position to answer during the application process. That's why I think the big takeaway right now is this program is out there. It's intended for small businesses, hence the threshold of 500 employees. So the CARES Act was a stimulus bill that provided close to $2.5 trillion of funding. And this isn't a political statement, but I want everybody to understand the overwhelming majority of that money is going to go to large corporate business interests. This Paycheck Protection Loan Program is the piece that has been carved out for the small to medium-sized local businesses of fewer than 500 employees, So the big takeaway should be jump on this, contact the lenders, specifically ask about the Paycheck Protection Loan Program, stay on top of them. I know Sal and myself, we're calling our bank and we're going to keep calling them until they get it together. If they don't have it together by this afternoon, we're going to call other sources and do the same thing. I really want to impress upon people, the point of getting this information out is to just jump on the lenders, stay on top of them, because a small...
On that note, Anthony, I found the PDF on the Arizona Department of Commerce website that has a breakdown of what institutions, what lenders are and their limits or starting amounts. It's very beneficial. I don't know if you guys are aware of that. I can send out a link.
Please do. I think as a small business community, everything we can share with each other right now is helpful. We're gonna share a list too. I will tell you, with regard to some of those limits that might be on some of that historical information, as Sal said earlier, it's really important to understand that most of the traditional SBA limits or requirements are being waived under this program. So I don't anticipate some of those minimums or some of those limitations necessarily being in play. The intent and design of the Paycheck Protection Loan Program is for it to be very accessible and flexible. I'm flashing up some more helpful resources and links here. Again, I would encourage you to read articles. There's the link here for this webinar or business town hall that the U.S. Chamber of Commerce did. I thought it was really well done in terms of the way they presented the information with multiple sources. They also had some information in there on the new paid leave legislation that came out prior to even the CARES Act. So I'd encourage everybody to keep looking at redundant or multiple resources. And with that, Isabella, I'll turn it over to you and so that we can hopefully, to the extent possible, answer any other questions.
Thank you, Anthony and Sal. The first question is, what will be considered, should we gather 12 months starting from retroactive date of February 15th was the first question.
Yes, I would, because they're specific, as of right now, they're specifically using that as a cutoff date. And it's my understanding and Sal's understanding at this point is they came up with that date in terms of trying to pin down a date where significant economic impacts related to the coronavirus or COVID-19 started to somewhat, impact small to medium-sized businesses. So if you're going to do a 12-month look back and you're going to start pulling down, I would recommend paper and PDF copies. I mean, this is where we as small businesses kind of need to roll up our sleeves. And, I know it's kind of a pain in the butt sometimes to pull this documentation together, but if you have access to online banking and you can start printing stuff, saving PDF copies, yeah, I would use 12 months from that February 15th date in terms of a look back.
Thank you. The next question is, what will be considered utilities?
So To our knowledge right now, definitely your typical water, electric, gas. Again, I'm not sure if it's DirecTV or if you have some smoke and cable package through Xfinity. I don't know what the lenders are going to have the specific guidance to the extent any of that is excluded. Along the same lines, there are certain things that we as business owners consider utilities that I'm not sure they will. I would say gather all that information up. For example, we're a bookkeeping and accounting firm. We consider some of our core utilities, some of the software we use. I, as a business owner, I'm going to prepare documentation on all that stuff during the 8-week period. The worst that could happen is they say yes to water, yes to electric, yes to gas, yes to basic cable, no to DirecTV, or no to my software, or, you know, the more documentation, the better.
Great. The other question is, can we get a copy of this PowerPoint emailed to us? Yes, we can. We're going to make it available on the website, and you are welcome to go in there and pick it up later this afternoon. Also, too, with the links that Anthony and Sal have provided, we're going to make this all available to you. Next question is, does the 8-week period start on February 15th?
No. So the 8-week period starts, that 8-week period starts the day your loan is granted. So what they're doing is determining the amount you're eligible for using payroll, granting you the loan, and that the loan gets approved, and they will physically approve the loan and provide the business with the funds. The 8-week period starts when your loan is approved and you receive the funds. So from that point in time forward, now they're saying, okay, I gave you this money essentially over this 8-week period. I'm going to ask you to document and ultimately share with me what if you had these types of expenses, what your payroll was during this 8-week period after you get the loan, what your associated payroll costs are. Like I said, in terms of if you provide any benefits as an employer, what your rent, mortgage interest, or utilities are for that 8-week period starting from the date you get the loan until that 8 weeks is done. They will then use the total of those expenses from that 8-week period to determine what, if any, of the original loan is eligible, again, to be turned into a grant and forgiven in terms of the principal not being paid, having to be paid back.
Next question is, how can we be ensured that the loan will be turned over to a grant? Because if we don't have the money now, we won't be able to pay it back as a loan.
Yeah, no, totally understandable. Again, I can't provide any assurance. I mean, this is literally the part that the lenders are going to have to handle in terms of giving you better information on that. I can tell you one way to kind of potentially put yourself in a bad situation is not to have all your documentation ready to go for that 8-week period. The lenders are going to have more specifics regarding turning the loan amount into a grant and having a portion or all of it forgiven. That being said, one of the specifics that we haven't talked about, and that is still forthcoming and going to be determined on case-by-case basis, is what is the term or what is the length of the loan, right? So if it wasn't forgiven, is it a 10-year loan? Is it a 30-year loan? Is it a 1-year loan? We know the maximum interest rate is 4%, which is a relatively low interest rate. If you were to go and get a line of credit or a small business loan outside of a program like this, the interest rate is going to be higher. So what determines typically in a regular loan scenario, what determines the payment due, it's always a function of the interest rate and the period of time or the term of the loan that the loan covers. That's going to be determined on a case-by-case basis. But I know the intent is, the intent of the program is to not burden small businesses with onerous debt and onerous debt service payments. To the extent the loans are going to be forgiven or how that's actually going to come to fruition, again, is something that the lenders are going to have to handle. And they're going to be the ones really in the best position to answer those questions during the application process.
Next question, business utilities or personal utilities, and on which form?
Can you repeat that again?
Business utilities or personal utilities, and on which form?
So there's no form right now because the lender's gonna provide the business owner with the mechanism for submitting that documentation. Now, business utilities is the short answer. If you happen to be a sole proprietor or an independent contractor and you work at home, or you have expenses related to, you know, a home office or utilities that are part personal and part business, then more than likely what's going to happen is it's going to get handled similar to the way it gets handled when you file your tax return, which is when a person files their tax return and they're a sole proprietor or an independent contractor, typically what you do on your tax return is say, hey, I use this square footage of my house for an office associated with my business, and you take a business deduction for that, and you say, hey, I use this percentage of my utilities for business purposes. So whether you have utilities assigned distinctly to your business, or you have utilities that are assigned in your personal name, but some of those utilities, a portion of those utilities are used for business purposes, the lenders are going to, again, give you instruction on what information they need to justify what portion of a utility bill in your personal name is used for business purposes. That's just something they're going to have to work out and give you guidance on in terms of how you calculate that and what they determine is kind of acceptable or reasonable documentation. That's typically the case even on your tax return filings, is you use square footage of a home office to determine what portion of your rent or mortgage interest is related to business purposes, and use the same pro rata percentage of square footage that you use for business purposes to apply to your utility bills that might be in your personal name.
Next question is, did you say you had a list of bank and credit unions that are doing this?
Yes, so what we have is, and give me 1 second here, what I'm going to do, if everybody can just bear with me for a second. We will share this with the chamber. Okay, so what this is, and again, I would encourage you to start with your local bank, the bank that you bank with, the bank or credit union, because chances are they could be participating in this program, even if they're not on a list that you find online. But what I have up on the screen here, I'm gonna change the screen I'm sharing so that you can all see this. Can you see that now, Isabella?
Now we can.
Okay. So the Small Business Administration for every district office in the country puts out a list for the previous fiscal quarter ended of who are the top lenders, SBA 7A lenders, right? You'll see JP Morgan Chase, Wells Fargo, US Bank, some of the big banks top the list. This list is a couple pages long, and I was telling Isabella earlier, I know for a fact Bank of the West has locations and a presence here in Tucson. So does BBVA, so does Comerica, so does, let's see, who else is on here? Commerce Bank of Arizona, Pacific Western Bank. There's a couple. Now, this is just top SBA lenders. This isn't all SBA lenders. So the vast majority, like, again, I know Vantage West, I believe, is a 7A SBA lender, and they're a credit union. So the vast majority of local banks have some participation in SBA programs. That includes the big banks, like I said, like the ones that top the list, like Chase and Wells Fargo. Even if they don't have a local presence, a lot of the banks on this list might be Phoenix-based and might not have. You can still call them and they're still lending under this program, state and nationwide. I know another one that's on here was NewTek. NewTek is on the list for Arizona, but they're actually an online SBA lender. They're one of the largest SBA lenders that pretty almost exclusively work with an online presence. So between contacting your local bank that you happen to bank with now, checking this list and kind of just, I'd recommend Googling around too if you've got any that aren't on this list but you're curious about. I think you're going to be able to find sources that you can start making calls to.
All right, we had a couple more questions come in. Let's see here. The next one was, what about 1099 contractors? Do they count?
Yes. So when I mentioned earlier, independent contractors are eligible. Yes. So again, you probably get paid from clients or other businesses, but you don't run your pay through formal payroll processing. Whatever documentation you have available for you to kind of verify or substantiate the income that you're losing because of COVID-19. So it might be, again, your 1099 forms that you received from last year, 2019. If you have bank statements or a separate bank account or bank transactions that you can identify as, hey, these are the normal payments I get in. Start pulling that information together because yes, independent contractors, 1099 contractors, sole proprietors, you are eligible for this program. You don't necessarily have to be a formally organized limited liability company or S Corp or, you know, to the extent you are, great. Get that documentation ready as well to substantiate the existence of your formal, you know, LLC or corporation. If you don't have formal organization like that and you're just a 1099 independent contractor, yes, this program is open to you. The lenders will give you more information on the support you can provide to substantiate your wages and pay. But I would start with your 1099s that you have on hand from 2019. And to the extent you have bank statements where you can identify payments you received in that previous 12 months, go ahead and do that now.
What if our local credit union is not 7A approved and does not do business loans?
Then start calling everybody else on that list who is. That's what we're going to do. I mean, we're not just talking to, so, you know, Sal and I happen to bank with an institution that isn't a 7A lender. We're not just calling them. We're calling other 7A lenders from this list. Online sources, other sources in Arizona, because really, again, it's about who's going to get their act together and get the ball moving on this thing fast. Some institutions are going to be slower than others. So we're not limiting ourselves, nor do I think should you as a business owner, to the institution you work with. They're your starting point, but by all means, I would recommend making those calls to other folks or other institutions that are 7A lenders on that list. We anticipate that there's going to be a lot of activity surrounding this. You're kind of consuming this information very early in the process. The bill just passed Friday. We live in the age of social media and digital media. Sal and I anticipate by the end of the week, businesses are going to be scrambling. Again, this program is our part of the bill as small businesses. It's there for us to utilize since we've been adversely impacted by COVID-19. So the more time that goes on, the more activity there's going to be, the longer lines there's going to be, so to speak, in terms of being on hold, even with lending institutions, let alone a federal or state authority, as I've heard other people kind of complain about with regard to unemployment benefits and some of that other stuff. So start now, call your institution, call other lenders on the list.
Okay, FICO score and paying 1099 contractors, is that an expense forgivable loan or payroll category?
So my understanding is paying independent contractors, right now I don't see as in, so you as the business are eligible, but again, I think to our knowledge, what determines what becomes potentially forgiven is only determined by payroll of the, or pay of the wages for the owner and the employees, the utilities and the rent or mortgage interest, not payments out to independent contractors. What was the question about the FICO score?
FICO score It added that at the beginning, FICO score
Yeah.
and paying 1099.
So again, I addressed the 1099 issue. Again, to our knowledge, lenders will have better information. Sal mentioned earlier, this program waives traditional requirements of the SBA loans. One of which was having to issue a personal guarantee of the business or put up collateral to get the loan. Because you're not being asked for a personal guarantee or to collateralize the loan as the owner, I don't believe that FICO score is going to play into the equation. FICO score typically determines credit worthiness when they're trying to assess if your personal guarantee is enough to secure a traditional loan. Since they're not seeking personal guarantees and collateral on these loans like they typically would, I don't believe that FICO score is going to be an issue.
Okay. Which I think answered the next question, which does credit score matter?
Yeah.
All right, so next question, business owner paying out 1099 contractors?
No, again, similar to what I just answered, here's the thing, and I'll bring this up. There's already a distinction, or there's already a gray area and a lot of, at the government level and even local government levels, a lot of debate about who is an employee and who is an independent contractor in your business. If you don't have somebody classified as an employee, then their pay, and you're paying them as an independent contractor, their pay is not going to increase the amount of the loan you're eligible for. What it does, though, because you're paying them as an independent contractor, is it makes them eligible to apply themselves. So if you're not treating somebody as an employee and paying them through payroll, what you pay them as a contractor is not going to add to the amount you're eligible for in terms of the loan amount or any forgiveness. But because they are an independent contractor getting paid, they are now separately eligible to apply. So keep that in mind. I know businesses work with folks in an independent contractor capacity. They do not become part of, if they're an independent contractor and not an employee of yours, they do not become part of your eligibility. They can apply separately as themselves as an independent contractor. But again, that is the intent of this program. That's why they included independent contractors, because they understand businesses have employees and sometimes work with folks in an independent contractor capacity. So they don't want to exclude them from getting access to these funds.
Okay. In your opinion, is the PPLP a better choice than the EIDL?
Ooh, I knew I was going to get this one. I was hoping we were going to be able to. Here's the thing. Here's my cop-out answer. I don't know. So what I can tell you is, here's what I can tell you. I can tell you what Sal and I are doing for our business, in that we're taking a step back and we're saying, hey, why did the federal government, through the stimulus bill, deploy the Paycheck Protection Loan Program? And what essentially did they do by rolling that out? Well, I look at it as they took a step back and said, we as the federal government, let's be honest, we have a lot of red tape, the wheels of government move slowly, and we're not the best at moving quickly and administering these programs. So let's use the private sector by partnering with banks, credit unions, and other lenders at local levels all across the country to deploy the Paycheck Protection Loan Program. That way, our government system isn't all cluttered with applications that our limited staff and limited resources have to, wade through. And again, at best, they tend to move pretty slow. So I can't say one is better than necessarily say that, I don't know, the SBA could surprise everybody and EIDL loans could start going out really fast. I can't say that for certainty. I know from my perspective, being a business owner myself, if there's a private sector solution available in something like the Paycheck Protection Loan Program, right? Where the money is provided and guaranteed by the SBA and the Treasury, but administered by the private sector at a local level. I know for me in my business, and Sal and I, we're going there first because that's where we see there being the most expediency in terms of getting applications done, process, and ultimately getting funds into the hands of owners.
Yeah, and I think that that's a good point that, you know, better is, you know, there's a lot of ways to think about better. If you need money and cash flow now, then potentially the Paycheck Protection Program is better because it probably will be a quicker way to receive funds than trying to go to the SBA website, which is currently down. So yeah, absolutely. You know, better is a tough question. I really think you have to think about it in terms of your business. You know, if you need some short-term, quick cash flow that you can access because you have a good banking relationship with an institution that's already a 7(a) lender, then absolutely the PPL program is going to be better from that respect. If you're thinking about more of the long-term game and how's my business going to survive over the long term, then, you know, the other SBA program, the EIDL, I think that's what they're calling it, may be a mechanism to get funds more to be used over the long term with respect to it being a loan and potentially a bigger dollar loan than just the Paycheck Protection Program, because remember, that's only 2.5 times an average payroll.
So 2.5 months worth.
2.5 months worth.
And I think it's important to know, like, unfortunately, you probably saw the federal government release their guidelines yesterday via the president's kind of news conference that, you know, social distancing, non-essential businesses being closed. I mean, they moved the timeline to April 30th at the earliest here, right? So this is potentially going to be, one, the timeline's been moved. Now we have a longer term issue as small to medium-sized businesses locally, right? Two, we don't really know what the health impacts are going to be, and we don't really know how long this is going to last. And I can foresee there being additional down the road traditional SBA programs being available, additional SBA loans for maybe a medium or longer term available with looser restrictions than there have been in the past. The Payment Protection Loan Program is really designed for that immediate, you know, relief to cover this 2.5 months of payroll or that level of expenses over that 2.5 month period, and provide, you know, the opportunity to turn that into a grant and have some, if not all of it, forgiven. Beyond that, again, like Sal said, I think with the SBA, with the EIDL loans and potentially some other programs through the SBA that may come into play, there's going to be additional support or loan support for, you know, loans that can help businesses in the longer term, because there's the immediate impact right now, but let's be frank, there's an economic recovery period to come for all of us as small businesses after even that first 2.5 months of impact.
Okay, here are the final 3 questions. First one is, would K-1 be used just like 1099 for payroll?
So a K-1 is typically issued to you as the owner of a business, right? Your K-1 amount typically shows what your proportionate share of the business's profits are. So, you know, if you own 50% of the business, your K-1 is going to show what your 50% of the profits are. Typically, that's somewhat different than what your distributions or what you paid yourself through the business is. So get your K-1 ready, but also go into your records or books if you're an owner of a business, because that's who gets a K-1. And through your bank statements or other documentation you have, really try to identify what you paid yourself out of the business, even if it wasn't through payroll, even if you just took a check or moved money from the business account to your personal account. What did you pay yourself over that 12-month period out of the business as pay, as owner's pay? because a K1 shows your share of total profit for the business, which may be different than what you actually paid yourself out of the business in terms of cutting yourself a check or moving money from your business account to your personal account. So I'd recommend getting both of those sources of information available to have ready to go over with a lender.
Okay. What is the difference between filing for SBA loan in a bank and filing with the SBA website?
Yeah. So in a traditional sense, outside of this COVID thing, usually nothing, in that the SBA typically uses these. That's why there's already an existing list of SBA lenders, because the SBA is just kind of like where funds originate. Banks and credit unions were already serving in this capacity where you apply with them, and then they just serve as the intermediary between you and the SBA. So right now, applying directly with the SBA was more for those EIDL loans, those economic disaster loans. Traditionally, in a traditional sense, you wouldn't apply directly with the SBA. You would work with a local lender or an online lender or a bank or credit union, and they would serve as the conduit between you, the business owner, and the SBA. So the Paycheck Protection Loan Program is leveraging that. They're saying, hey, we already work with all these people during times when something like COVID-19 isn't in play. We already have boots on the ground as the SBA. We have all these lenders we work with. Let's use them, since they have better resources and better in a better position locally to facilitate this with the business owners. Let's use them like we normally do as a conduit to get them these SBA funds.
Great. Last question. Does the EIDL program have a loan forgiveness clause?
So that's what's somewhat unclear right now. Like I will be honest with you. I mentioned earlier, if you happen to get EIDL funds, and then you happen to also get approved for Paycheck Protection Loan Program, what they've said is, I'll determine the total amount you're eligible for under the Paycheck Protection Loan Program. And let's say, for sake of an example, that's $50,000. And you say, yeah, but I already received $10,000 under an EIDL program. They'll say, okay, well, that means instead of it being eligible for the $50,000 under the Paycheck Protection Loan Program, you already received 10 from EIDL, so you're only eligible for 40. How and if that 10,000 that you got from EIDL is included on the back end in terms of determining what's forgiven, we're not 100% clear on the interplay of those two elements. And I don't think the lenders are going to be. I will tell you, as of today's the 30th, as of March 31st, which is tomorrow, I believe we're going to see information, and I've seen it in other sources. And again, we'll see what actually gets pushed down to the lenders. I've seen information where it's like, hey, apply for one or the other. You might get both, and they'll go ahead and do that offset. But really, the hope is that the Paycheck Protection Loan Program is the vehicle that business owners kind of flock to. Look, the government, we think the government is banking on that. They're trying to relieve pressure directly on the SBA and the EIDL program because they're not equipped to handle it. And the way they're trying to relieve that pressure is by rolling out, starting this week, the Paycheck Protection Loan Program.
All right, those were all our questions. We want to thank Anthony and Sal for joining us again and taking us through this informative webinar, and also thank everyone for their wonderful questions. I think they were helpful in giving us all more insight. Thank you. Anything else, Anthony?
No, just want to say thanks to everyone for attending. Sal and I are a small business too. We're all in this together. We love our small businesses here in Tucson, and hopefully everybody's staying, healthy. And, I just think, thanks again to the Chamber, Tucson Hispanic Chamber, for putting this together. And the more we can kind of support each other, the better. I know it's going to be a tough process over the next couple months, but it's great to see people sharing information and communicating with one another here locally. And I know Sal and I are very thankful for that, and just want to wish everybody the best over the next little while. And again, stay healthy, and best to you and all your families.
Thank you, everyone. I have posted the website once more, and we will make all of this available. Thank you so much for joining us. And let us know if we can help with anything else. Thank you.
Thank you.
And remember, 11 o'clock is going to be the cafe, right, Isabel?
Yes, anybody's welcome to join us for that. That's also available on our social media and the website. So join us. See you then.
See you then. Bye.
Bye.
Bye, everybody.
Adiós.
Good to see you all.
Nos vemos a ratito.
Nos vemos, preciosa.
Cuídate. Ay,
Igualmente.
qué estrés, ¿verdad? Cuídense, nos vemos a ratito.
Bye.
Okay, bye.